हेलो एंड वेलकम टू बैंकिंग बाइट्स एंड दिस इज कुश पांडे। आज का जो टॉपिक है वो बड़ा सिंपल, बड़ा बेसिक पर बहुत एलिमेंट्री एंड इंपॉर्टेंट है, दैट इज बैंक एंड एनबीएफसी। वी आर ऑफन कंफ्यूज्ड बिटवीन द टू टर्म्स, दैट इज बैंक एंड दैट इज एन एनबीएफसी। शुरू करते हैं कि एक बैंक क्या है और एक एनबीएफसी क्या है। First of all, we have separate acts for both these terms, both these institutions. For bank, the act is the Banking Regulation Act 1949, which was previously called as Banking Companies Act. Under this particular act, any institution becomes a bank. All the functions of a bank are defined in this particular act. Similarly, NBFC, which stands for Non-Banking Financial Company, is under the Banking Companies Act of 1956, in which a NBFC is formed. That is the first part. Second part की बात करें and a basic difference की बात करें, a bank can accept time and demand deposits. That means you can open a current account, savings account, a recurring account and a fixed account in a bank. But unlike a bank in NBFC, you can only open the time deposit, that is FD or RD. यहाँ पर एक और बड़ा statement है, checks can be offered only in a bank. Checks cannot be offered in a non-banking financial company. So we've covered 3 points, guys. The first, second, and the point that check is only issued by a bank and not by a NBFC. आइए बात करते हैं third part की. In the recent past 6 months, the rate at which a bank provides loans is under now the MCLR, that is marginal cost of funds based lending rate. We'll discuss this particular term in a separate banking wide video, पर इस बात को याद रखिएगा कि this particular rate focuses on all the flexible changes, all the current market conditions in the entire system and then the rate decided. तो इसको डिस्कस करेंगे हम डिटेल में in a separate video. But remember, now the lending rates are defined by the MCLR in a bank, but in an NBFC it is defined by BPLR, that is benchmark prime lending rate. In the coming week we'll make a video in which we'll discuss about base rate, PLR, BPLR and also about MCLR. So do watch out for that particular video. आगे बढ़ते हैं. The bank is often referred to as the backbone of the economy because all the major, whether it is between state and bank and government, bank and RBI, or between customers and the bank, or between customers and customers, takes place as under the banking system. For example, the big infamous 2008 subprime crisis in US especially happened because of the failure of banks. So जो bank है, that is the backbone. It provides the economic and the financial support for the normal functioning of a country. But if we talk about an NBFC, it does a similar function, but it is not a bank. So if any institution which does a similar function, thereby becoming a backbone, but it is not a bank, that is called as a shadow bank or shadow banking. तो ये similar function करेगा बैंक की तरह, पर ये बैंक नहीं है. It will be called as a shadow banking. And in the end, guys, both the bank and the NBFC are regulated by the RBI, that is Reserve Bank of India. Having said this, there are cases, for example, mutual funds, venture capital funds, these are regulated by SEBI. Similarly, we have different other NBFCs which are regulated by different regulators. But if in the examination the question is asked, the NBFCs are regulated by, the answer would be without a shadow of doubt would be the Reserve Bank of India, because that has been asked several times in the examinations. So this was all about bank versus the NBFC. Do write in the comment section what all other videos you want in our Banking Bytes series. Will soon come up. I'll have discussed earlier regarding all the rates, for example, BPLR, MCLR, PLR and base rate. Thank you so much, guys. This is Kush Pandey signing out from the show. Peace out.